Okay, so let's unpack this. Have you ever really thought about how the lines are just dissolving between, the big traditional financial giants, the ones we've used for ages, and this whole world of digital assets? It feels like it's happening so fast. Blockchain was like this niche thing not long ago, right, for tech people. And now these huge global finance companies, they're not just playing around, they're actually building this stuff into their core systems. They're really intertwining with it. So the big question for us today, I think, is this. Is this just, a fad, a quick experiment? Or are we looking at something more fundamental, like a real shift in how money moves everywhere for good?
Today, our deep dive is going right into a huge piece of news that really shows this shift. Visa. Specifically, their big expansion of stablecoin settlements. We're going to be digging into this really insightful article. It's called Visa's Expanded Stablecoin Settlement, a multi-chain future. And our mission, really, is to pull out the key insights from this. What exactly did Visa do? Why did they do it?
And crucially, what could this all mean for payments, for the whole financial system that affects, all of us?
Yeah, and what's really fascinating here, it isn't just that Visa's involved with stablecoins. Lots of companies are exploring that. It's the scale, the sheer commitment they're showing. This isn't just another software update. This news, it feels like a potential game changer. I mean, think about Visa. They handle something like, 170 billion transactions a year? That number is just staggering. So when they make such a big, deliberate move into stablecoins using multiple blockchains, well, that's like building a superhighway between traditional finance and the blockchain world. People have talked about this convergence for years, but Visa's actually laying down the pavement, It's a really clear signal.
Right, a superhighway. I like that. So let's get into the big picture here. The main news is Visa seriously broadening its stablecoin settlement system. And the article specifically calls it an expansion of their on-chain payment infrastructure. Okay, on-chain, let's clarify that a bit for everyone. Usually Visa runs its own massive closed network, right, for settling payments between banks and stuff. Payments go through their system, and then maybe a day or so later, the actual money settles up using traditional bank methods. On-chain means they're now using public blockchains, these decentralized digital ledgers, to actually handle some of that final settlement directly. It's like moving some of their internal bookkeeping onto these public, verifiable digital rails. It sounds like a pretty big deal, not just a small tweak. So the question that just jumps out is, why? Why is a company like Visa, built on decades of, regular money transactions, investing so heavily in stablecoins? What's the real driver here?
Well, connecting it to that bigger picture, I think this move is almost existential for Visa's future.
Yeah.
It's not just a tactic, it's core strategy. It shows they have a much longer-term view. This isn't some short-term experiment they might scrap later. Visa is clearly trying to position itself right at the front of this whole digital currency wave. And they're doing it deliberately. Think about it. Their entire business is built on enabling payments globally. If money starts moving more and more digitally on these blockchains, well, they have to be part of that infrastructure, right? Otherwise, they risk becoming irrelevant. They need to be the network, whatever rails the money runs on. So this ensures they stay central, they stay dominant, even as the very nature of money shifts from, notes and wires to tokens on a chain.
That makes sense. It's about staying relevant in a changing world. But are they leading or are they reacting to the market?
It's probably a bit of both, isn't it? Like any big leader, they have to watch the trends, watch what users are doing. So, yeah, they're reacting to the fact that digital assets are undeniably growing. But the way they're doing it, building this multi-chain, multi-currency system alongside their existing giant network that shows leadership. They're not just running a small pilot in a corner somewhere. They're designing a really robust architecture for the future. They see the writing on the wall, basically. Finance is digitizing. And they want to be building the roads, not just, driving on them after someone else builds them. It shows real foresight.
Foresight and responsiveness. Yeah, a good way to put it. Okay, let's drill down now. What exactly did Visa add? What are the specifics of this expansion? This is where you see the real substance. First, new stablecoins. The article mentions some key ones. They brought in PayPal's PYUSD. That's a big one, dollar-backed. And significant because, well, it's PayPal, another huge fintech player. It suggests these giants are starting to connect their systems, realizing they need to work together for seamless money movement. Then there's Paxos-issued USDG, the global dollar, also dollar-backed. But the article calls it part of an industry-backed initiative. That sounds important.
It does. It implies it's not just Paxos alone, but maybe a group of banks or other big institutions backing it together. That suggests a sort of pre-approved institutional comfort level, maybe more interoperability baked in from the start. That's very attractive for someone like Visa handling massive settlement flows. Less risk, perhaps.
Definitely sounds less risky. And then the really interesting one for me, Circle's EURC. This one is euro-backed. That's a major step, isn't it? Moving beyond just the US dollar.
Oh, absolutely. It opens up a whole new dimension. Think about Europe, trade within the Eurozone, payments between Europe and the US or Asia using a stable euro.
Exactly. And we should remember, this isn't totally new territory for them. They started piloting Circle's USDC back in 2021. So you can see the progression. Start with USDC, prove the concept works for settlement, and now, bam, expand to other major currencies like the euro and these other dollar coins like PYUSD and USDG. It feels very methodical, but it's not just the coins, right? They need the roads for these coins to travel on, the blockchains. They've also expanded the networks they support. They added Stellar and Avalanche. That's on top of Ethereum and Solana, which they already supported. So let's recap the whole setup now. After these updates, Visa's stablecoin platform supports 4 stablecoins: USDC, PYUSD, USDG, and EURC. And it runs across 4 different blockchains: Ethereum, Solana, Stellar, and Avalanche.
You know, just seeing that laid out, 4 coins, 4 chains, the breadth of it is what really strikes me.
Yeah.
It's not a small bet. What does this multi-chain approach tell you? Are they just hedging their bets, or is there more to it? That's a great point. It absolutely shows a pragmatic, maybe even cautious, but definitely broad strategy. They're not picking one winner. And supporting both dollar and euro-backed coins like EURC, that's huge. It says they see this as a global phenomenon, not just a U.S. thing.
Yeah.
It makes their platform way more useful for businesses operating internationally, especially in Europe. This multi-chain, multi-currency strategy is all about building an adaptable, future-proof system. Different regions have different needs, different regulations. This lets them cater to that diversity. Think about payment corridors where old FX systems are slow and expensive. This could be a game changer there. And why Stellar and Avalanche specifically? Well, it's likely about diversification and finding the right tool for the job. Ethereum is, the big one. Lots of security, but sometimes it gets slow and expensive, right? Those gas fees can kill small payments.
Yeah, definitely. Not ideal for everyday transactions sometimes.
Exactly. And Solana is super fast, great throughput, but maybe relying on just one high-speed chain isn't ideal for global resilience. You want backup options. So Stellar. It was pretty much built for cross-border payments, remittances. It's designed to be super fast, like seconds, and really cheap. That fits perfectly with Visa's need for quick, low-cost transfers, especially for smaller amounts, maybe.
Okay, so Stellar for speed and cost on cross-border. What about Avalanche?
Avalanche offers something different with its subnet architecture. It's highly scalable, but also customizable. Visa could potentially use Avalanche subnets for, say, specific corporate clients or specialized payment flows that need more privacy or control than a fully public chain offers.
Ah, so different chains for different needs. Makes sense.
Precisely. They're building a toolkit. They can leverage Stellar's speed for remittances, maybe Ethereum security for certain high-value things, Solana's throughput, and Avalanche's customizability. It really highlights this crucial need for interoperability. How do you make money move smoothly between all these different systems? Visa is essentially trying to build that layer on top of these blockchains, letting funds flow across chains and currencies. That's the key to making this work on a global scale. They're solving the silo problem.
That explanation of the chain choices really clarifies the strategy. Okay, so we've looked at what they built, the coins, the chains. It's impressive infrastructure. But now let's pivot to the why. For a company like Visa, these moves have to be driven by strong strategic reasons. What are they? The article gives us some pretty clear pointers on their motivations and the benefits they see. First up, seems obvious but important: enhance flexibility for their partners. With EURC added, the article says select pilot partners can settle transactions in both dollar and euro-backed stablecoins. And this isn't separate from their main business. It apparently plugs right into their existing global treasury system, which already handles like 25 plus fiat currencies.
So it's an add-on, not a replacement. Seamless integration.
Exactly. The article stresses that the stablecoin platform runs alongside the traditional system. It's not forcing anyone onto crypto rails. It just gives partners more flexibility in how they move funds across borders and blockchains. More options, basically. Pick the best rail for the job. Beyond just giving partners options, it seems deeply tied to Visa's vision for money itself. There's a great quote in the article from Rubail Birwadkar. He's their global head of growth products and strategic partnerships. He says, Visa is building a multi-coin and a multi-chain foundation to help meet the needs of our partners worldwide. Pretty clear statement of intent. And he elaborates on their belief. We believe that when stablecoins are trusted, scalable, and interoperable, they can fundamentally transform how money moves around the world.
Wow, fundamentally transform. That's strong language from Visa.
It really is. It tells you they see stablecoins as like a core part of the future financial plumbing, not just some niche thing, capable of fixing real payment problems. And finally, it's not just Visa pushing this, it's also about market demand. They're responding to what people are asking for. The article mentions Visa is working with card issuers, too, trying to bring stablecoin-linked payment products to market. So not just settlement, but actual spending.
Making it accessible for everyday people, potentially.
Right. And why? The article says explicitly, growing demand from developers, banks, and merchants is driving the need for a more interoperable and flexible settlement layer. So it's the industry itself, their core clients, pulling this innovation forward because they need better ways to handle digital money globally.
And that flexibility point, it really does translate into a real edge, especially for businesses doing international trade. Let's take your example. Maybe a small online shop selling crafts worldwide, based in, say, Italy. Right now, they get paid in dollars, maybe pounds, yen.
Yeah.
They need to pay suppliers in Asia, maybe designers in the US. It's a mess of FX conversions, delays, fees piling up.
Yeah, I can imagine the headache.
So with Visa's new rails, maybe they can choose to receive payments directly as EURC or convert incoming USDC to EURC almost instantly on-chain. Then they could pay their supplier in Asia using USDC maybe, all potentially faster, cheaper, and with less currency risk. And having it run alongside the old system is smart. Big companies don't have to rip everything out. They can ease into it, use stablecoins where it makes sense first. It's evolution, not a sudden disruptive revolution. Much easier for businesses to adopt. And when Visa talks about fundamentally transforming money movement, what does that look like in practice? It means nearly instant global transfers, slashing those cross-border fees, more transparency because it's all recorded on blockchain. Think about remittances again, someone working abroad sending money home, instead of waiting days and losing a big chunk to fees.
The money could arrive in minutes with minimal cost. That's huge for families relying on that income.
Exactly. And the fact that they explicitly mentioned demand from banks and merchants.
Yeah.
That's key. It confirms this isn't just crypto enthusiasts pushing it. It's the mainstream financial players seeing the utility and actively asking for these tools to make their own operations better and serve their customers better. It's moving into the core.
Right, and you can't really understand Visa's moves without looking at the broader context, especially regulation. That seems critical here. The article points to a huge factor, the regulatory tailwind, specifically mentioning the Genius Act in the US, and the timing is really striking. Visa's expansion announcement came just weeks after this act passed. That can't be a coincidence, right?
Highly unlikely. That act provides the regulatory clarity for stablecoins that big players have been craving.
Exactly. And importantly, it also sets guidelines for how banks can build digital payments infrastructure. It basically gives them a rule book. So what does that clarity really unlock? Before this, stablecoins were in this kind of murky legal zone in the US. Were they securities, commodities, something else? That uncertainty is paralyzing for big regulated institutions like banks or Visa.
Absolutely. How do you build systems around an asset if you don't know the rules? What are the capital requirements? Compliance risks.
Right. So the Genius Act, by setting out that framework, it effectively de-risks it. It gives them the green light to move from just watching to actually building and deploying.
Yeah.
They know the rules of the road now.
Precisely. And this regulatory step just reinforces what many in finance are starting to agree on. Stablecoins are one of crypto's most promising applications, maybe the most promising for mainstream finance. And the why is pretty clear when you think about it, especially compared to, say, Bitcoin's volatility. Stablecoins are designed to hold their value, pegged one-to-one with fiat, like the dollar or euro. That stability is crucial.
Makes them usable for actual payments, not just speculation.
Exactly. Perfect for commerce, for sending money, and acting as that bridge between the old financial world and the new blockchain efficiencies. You get the speed and low cost of crypto without the crazy price swings. Best of both worlds, really. And the market potential reflects this optimism. The numbers are pretty eye-popping. The article says the current stablecoin market is about $273 billion, which is already big.
Yeah, not small change.
But some analysts projecting it could hit over $2 trillion in the coming years.
Wow. $2 trillion, that's hard to even picture. What kind of scale is that globally?
It's massive, bigger than the entire economy of many countries. If stablecoins reach that level, they'd be handling a huge chunk of global payments. We could be talking about a significant amount of international trade, remittances, maybe even retail spending, settling via stablecoins on blockchains. leveraging those efficiencies at a scale that's just unprecedented. So you see this convergence. The regulations are getting clearer, the big players like Visa are building the infrastructure, and the market projections are enormous. It paints a future where stablecoins aren't just niche, they're integral, maybe even foundational, where traditional finance and DeFi aren't enemies, but partners. It's about the evolution of money itself.
Okay, so let's pull all this together for you, listening in. What does this Visa news, this whole trend, actually mean for your financial life? Maybe sooner than you think. Visa integrating multiple stablecoins, multiple blockchains. It's not just corporate strategy talk. It's a real step towards a global financial system that's more connected, more flexible, more efficient. It's not science fiction anymore. It's being built right now by companies like Visa that are fundamental to how money moves today. So think about how it could change things for you. Sending money internationally, maybe to family, maybe paying a freelancer overseas. Right now, you probably face fees, bad exchange rates, delays, maybe days for the money to arrive. With stablecoins running on these Visa-supported rails, imagine that transfer happening almost instantly, with tiny fees. No waiting for banks to open. It could even eventually change how you shop every day. Maybe stablecoin-linked cards become common just like your debit card now. This isn't just about banks moving money between themselves. It's about changing the actual plumbing of finance in a way that could reach right into your digital wallet, making global transactions feel as simple as sending a text.
And it really does raise that big question, doesn't it? Is this just the start? Will we see major financial institutions fully embrace blockchain for their core operations? The long-term potential is huge. Stablecoins are kind of perfectly placed to bridge that gap. Traditional fiat stability meets blockchain efficiency. They blend the familiarity and regulation of fiat with the speed and low cost of crypto. When a giant like Visa, whose whole business relies on network effects, invests this heavily, it shows they truly believe this is where things are heading. It suggests the future isn't purely decentralized or purely centralized. It's likely a hybrid, a mix where traditional financial muscle works with blockchain innovation. That could change everything from global trade finance to how economies interact. A truly interconnected global financial network.
Yeah, just imagine that future for a second, where all that friction in cross-border payments, the fees, the delays, the currency conversion hassle just melts away. Replaced by transfers that are almost instant, super cheap, moving 24/7, powered by this blend of old financial strength and new blockchain tech. Visa's deep dive into stablecoins, it really feels like more than just their strategy. It's like a sneak peek, a blueprint for how money might move for every single one of us globally very soon. So the final thought to leave you with is, what new opportunities might this create for you? And maybe what new challenges could arise in this truly interoperable, faster financial world? We really hope this deep dive gave you a clearer picture of what's happening with Visa and stablecoins and why it matters. It's a fascinating space moving so quickly. And hey, if you found this useful, if you enjoyed the discussion and want more deep dives like this, please do consider hitting that subscribe button. And leave us a comment below. What are your thoughts? Do you see stablecoins changing how you handle money? We genuinely read them all and love the conversation. Engaging with the video, liking, commenting, subscribing, it really does help the channel get seen by more people through the algorithm. And that support allows us to keep doing this research, digging into these topics, and bringing you quality analysis on the crypto and digital asset world. Thanks so much for joining us on the Deep Dive.